Hello everybody, this is Lara from Pure Elliott Wave with an update for Solana, a full Elliott Wave count, and then I'll look at daily technicals for you, just daily, because if I did any more this video would be far too long. This is the full price history of Solana. My Elliott Wave count starts at the beginning in May 2020. From this low to this high, there looks like a really good looking 5-wave impulse that's labelled primary 1, primary 2 is zigzag, primary 3 an impulse, 12.85 times the length of primary 1, that's very long. Primary 4, really good looking triangle, and primary 5 was 4.15 times the length of primary 3. So this is the longest portion. This is where most of the profit would have been found. It's even longer than primary 3, and it travelled that distance in a smaller space of time in just 4 months compared to 5 months for primary 3. So again, I keep saying it, but it absolutely bears repeating. Holding on to get the gains of a fifth wave for a cryptocurrency is a really good idea, because that's very often where the most profit is to be found. From this high to this low, I am labelling this a second wave correction. It subdivides as a double zigzag. So here is your basic Elliott Wave pattern. You've got 1, 2, 3, 4, 5 steps forward is followed by 1, 2, 3 steps back. The 5 steps forward, this is a motive wave, this is an actionary wave, and they're always labelled with numbers. The 3-step back patterns are always labelled with letters. This fits as a double zigzag. The first in the zigzag is primary wave W. The first and second zigzag in the double is joined by a 3 in the opposite direction, labelled primary X. Wave X is brief and shallow. That's extremely common for X waves within multiple zigzags. And then primary wave Y deepens the correction reasonably beyond the end of W, so that the whole structure has a really strong counter trend slope. That's exactly what a double zigzag should look like. So this 5-wave structure up has a beautiful fit. It looks like such an obvious 5 on the monthly time frame, and this counter trend movement looks like an obvious 3 at the monthly time frame. So this part of the wave count I'm pretty confident in. From this low on up, it looks like we're getting another 5-wave impulse. Now I would expect this to be a third wave, because you've got wave 1, wave 2, and after 2 obviously comes 3. Wave 3 may only subdivide as an impulse, and that'll be labelled primary 1, 2, 3, 4, 5. My only question here is the degree of labelling. It's possible we could need to move this down 1 degree. It could be just primary 1 within cycle wave 3 nearing an end. That's possible, and I'll consider that in coming months, maybe in another year. I'd have to consider that, but for now I think I'll leave this. This looks about right. Primary 1 relatively short, primary 2 a little zigzag, primary 3 a long impulse. It's extended. When waves extend, you can see the subdivisions within them at higher time frames. So primary 1 is not extended. You can't see the intermediate degree subdivisions at the monthly time frame, but like this is a compressed accordion, and here the accordion is stretched out. It takes up longer in price and time, and you can see the subdivisions at a higher time frame. This is what an extended wave looks like. Primary wave 3 is 9.37 times the length of primary wave 1, so not as long as primary 3 to 1 here within cycle 1, but certainly a lot longer than 1.618 or 2.618. These are not Fibonacci ratios, I'm just noting how long these waves are. So primary 3 complete here most likely, primary 4 most likely complete here now, and primary 5 underway. I would expect primary 5 to be extended, probably in price and time, to reach the end of cycle wave 3. For now my target is at 2887, that's where cycle 3 would reach 11.09, the length of cycle wave 1. That is an extreme Fibonacci ratio, but I'm using that Fibonacci ratio because it's reasonably close-ish to how long this third wave was to this first wave. Within cycle wave 3, I expect primary wave 5 to be quite a long extension. I've drawn an Elliott channel around cycle 3 from the end of primary 1 to the end of primary 3 with a copy at the end of primary 2. It showed where primary 4 found support. It was continuing to show where pullbacks were finding support. It's starting to break down now at the start of primary wave 5. That's okay. It didn't work perfectly down here either at the end of intermediate wave 2. So the support line isn't really showing us as accurately as we would like where price is finding support. It's okay, it doesn't absolutely have to. They don't always work perfectly. It worked really well for the end of primary 4, and that was its main purpose. Primary wave 5 I expect is going to exhibit exponential-like growth. It may not be perfectly mathematically exponential, but it will look fairly similar, I expect, and that I expect a slow start an acceleration through the middle, and then an explosion at the end. And I expect it to have a somewhat curved look to it, even on a semi-log scale. We can see that at the daily time frame in here. Within primary 5, no second wave correction may move beyond its start below 111.4255. Let's take a look at the weekly time frame. We're going to look at the structure of cycle wave 3 from the low here. Hi friends, there are just 2 hours left to grab Learn Pure Elliott Wave at a discounted price. Here's what you get: 22 engaging lessons with hands-on exercises to help you truly understand Elliott Wave analysis, my free book to support your learning, an opportunity to add Learn Pure Technical Analysis for a steep discount, plus grab Buy Low Sell High as a free bonus when you bundle all 3 courses. This is your chance to access the ultimate learning experience, combining my 16 years of market expertise, 12 of those now as a chartered market technician, all packed into 3 powerful courses. Don't miss out, the sale ends at 10 AM today. Click on the link now and take your market analysis skills to the next level. See you in the course. This point down here, we can see a bit more detail now of cycle wave 3. We see primary 1, primary 2, primary 3, a really good looking impulse. It's extended. At the weekly time frame, we see intermediate 1, 2, 3, 4, and 5. It looks like such a good looking 5 wave structure. Primary wave 4 complete here, and now primary 5 underway. Let's take a look at this start of primary 5 at the daily time frame. So this video is not too long. I'm going to go from this low here, this point down here. I've relabeled this today, and here's the lower edge of the Elliott channel. I think I'm going to remove it on the daily chart, but I just wanted to show you it's not working at the moment, but it didn't work at the end of intermediate wave 2 either. So for the daily time frame, I'm just going to take that off, and I'm going to use a base channel around intermediate waves 1 and 2. Now from this low to this high, this looks like a reasonably good looking 5 wave impulse with minor 1, minor 2, probably a flat, minor 3, minor 4 brief and shallow, and minor 5 relatively quick and short. The 4th wave is disproportionate to the 2nd wave. If you know your Elliott wave, you'll know that proportion is one of the ways we can use to look to see if we've got the right wave count, but proportion is different for different markets. If you're looking for good proportion in a commodity, you should be expecting 4th waves to be brief and shallow compared to their counterpart 2nd waves. If you're looking for good proportion in an index like the S&P 500, it's the opposite because it's got an inverse relationship to volatility. The 4th waves are often more time consuming, the 2nd waves are quite deep often, but really brief, as the S&P forms rounded tops. Commodities tend to form V-bottoms. Cryptocurrencies are similar. They'll form V-bottoms, but more importantly, they form blow-off tops, and that's a really strong tendency for cryptocurrencies. When the 5th wave is quite strong, it forces the 4th wave that comes just before it to be more brief and shallow. Now, this one wasn't particularly strong, but it does have a brief, shallow 4th wave just before it. If you wanted to see 1, 2, 3, 4, now that's entirely possible. That's actually also possible. That would be my alternate. Here would be the invalidation point, 162.7827. A new low below that point by any amount at any time frame would invalidate that idea because 4 may not move into 1. But I think for a cryptocurrency, this is the most likely wave count. But I'm going to acknowledge that there is a viable wave count, 1, 2, 3, 4, and now 5. And I would label that an incomplete intermediate wave 1, not cycle wave 3, because cycle wave 3 has to move far enough beyond the end of cycle wave 1 to then allow cycle 4 to unfold and remain above wave 1 price territory. It hasn't done that yet. It hasn't made new all-time highs, and there was strong resistance at previous all-time highs, so unsurprising we got a pullback. The next time price gets up there, I will expect it's probably going to find the bullish momentum able to break through to new all-time highs. Let's take a look at some technicals. Just at the daily time frame, here was the last upward trend. It reached extreme, and at this high we had a bearish engulfing candlestick pattern, and we've got some pullback. Price is finding support so far about 168. If it falls through that, there's the next strong support just below is about 159. The moving averages are overall bullish. We had a golden cross back here as the purple 50-day moving average crosses above the green 200-day moving average. The short and the mid are above the long. The mid and the long have positive slopes, and price is above the long. So overall, the moving average situation is overall bullish. As price approached support here, we had a bullish reversal pattern and a hammer. a little bounce, and now a bearish engulfing pattern. These 1, 2, 3 candlesticks together also could be considered an evening star candlestick pattern, not quite a doji, there's a bit of a body on this, but an evening star. I'll just label the bearish engulfing because it's the most important. It's a stronger bearish reversal pattern, so that's the most important one to take note. We've got some more downward movement. I expect we might get a little bit more to test support a little bit more closely, about 168. That's entirely possible. For the very short term, the volume profile is bearish. Volume is pushing price lower, but overall, as price moves lower, overall volume is declining. So short term bearish, mid-term bullish. ADX tells us there is a downward trend at the daily time frame. RSI is not oversold. Money flow is below 50, as is RSI. There's a little bit of room below for this downward trend to continue, probably only to support about 168 or 159 before that final support is going to be found. If RSI money flow reach into oversold and price hits support, I would expect the downward trend is quite likely to end either sooner or possibly about there. This downward trend has relieved previous extreme conditions. The upward trend reached just extreme, not very extreme. RSI reached deeply overbought. Money flow didn't reach overbought, but it did exhibit bearish divergence. They're both below 50. The trend is no longer extreme. There's a new downward trend for the short term. So this downward movement has relieved previously extreme bullish, extreme conditions, setting the stage up for the resumption of the larger bullish trend. But for the short term, I expect we could see a little bit more downward movement to find support about 168 to 159 before the larger bullish trend is ready to resume for Solana. That's it for me today with a quick update for Solana for you. I hope you're all having a lovely day.